Welcome to Cross-Border Tax Talks, where we discuss the latest trends in international taxation, from Pillar Two to German taxes. I'm Doug McHoney, PwC's International Tax Services Global Leader. PwC's Pillar Two engine, powered by Beacon, is a game changer for Pillar Two modeling, provision, and compliance calculations. Built on a graph system utilizing over 20 years of international tax technology, this cloud-based centralized rules engine is developed by a team of Pillar Two tax experts from around the globe. PwC's Pillar Two engine is currently available as a service and is now available to license. On this week's episode of Cross-Border Tax Talks, we're at PwC's EMEA Tax Academy in Prague, Czechia, where I'm thrilled to welcome Arne Schnitger back to the podcast. Arne is a Berlin-based international tax partner with PwC and co-host of the German tax podcast, Frisch Serviert.
Very close, as always, Frisch Serviert.
Gosh, I'm trying,
You're
Arne.
trying. You're getting better every time.
Right.
So.
And who you host that with Christian Kaiser. I appreciate your generosity on my terrible German pronunciation. But Arne, welcome back to the podcast.
Thank you. Thanks for having me, Doug.
So Arne, before we begin, it's baseball season. I'm very excited about Major League Baseball season, 162 games. My Cardinals are a couple weeks into the season. And I get some feedback from our European and even Asian colleagues, other than maybe outside Japan and South Korea, that they have very little interest in baseball. Can you believe this?
No, very hard for me to believe because we Germans love
Oh,
baseball.
love baseball.
We don't, actually.
I know. Everybody knows.
Okay.
So I wanted to ask, I've been told a football-related question. And when I mean football, I mean the European variety,
you mean
not
soccer.
The American. I mean soccer.
You mean the real one, no?
Yeah, the real football. And I appreciate that. So Arne, who is your football team? Tell the audience, who do you root for?
Yeah, so Doug, I'm based in Berlin, as you said, but I'm actually originally from the north. So for all the Germans who might listen, it's of course I'm a fan of Werder Bremen, and it's a period of suffering because we have been not so successful, but it doesn't matter. So that's where I am. So not Bayern Munich, Werder Bremen. And the next time you come to Germany to visit us, we're gonna go to a stadium. And and then you'll understand.
I'd love that. How long has your period of suffering been as a football fan?
Don't ask.
It's a long time?
It's a long time, long time.
Okay.
Let's skip the tax laws.
All right, because my St. Louis Cardinals have been in a lull for about 2 years, and it feels like a long time, but it sounds like you might be longer than that.
Yeah.
Okay. All right, so let's dive in. Plenty to talk about from a German tax perspective, but maybe if you can just set the table before we begin, because we've got German tax law, we've got some elections and the potential implications that those have for German tax policy, corporate tax policy.
Yeah.
Of course, I want to chat about Pillar Two. It's been a while since we've caught up on that.
Sure.
And then maybe sort of end with some of the simplification in the EU and how all these different layers of tax are going to fit together. But maybe just remind listeners for a couple of minutes sort of the German corporate tax basics.
Right, yeah. So basically in Germany, I think that's the one thing which is a bit peculiar, you can say. In Germany, corporate income tax rate is 15%. You might say it's actually not so bad, kind of competitive.
15.
Yeah, 15, you would say that's actually okay. There is a second part of it, which is basically trade tax, as you might know, and something very well, yeah. So this is actually in each municipality being set, but on average it brings another 15% on it. So you end up somewhere at 30%. So, and of course, now the big question comes, as you said, we had elections basically, and the big question comes up, to what extent do you want to become more competitive? Do you want to lower the rate so far for corporations? Germany has been in recession the last 2 years, basically. And of course, that should be changed. With the new parties becoming in place, there's an argument to what extent there's a lowering of the rates. And we probably can talk about this a bit more if you're interested.
I am, but also how does your CFC regime work? Just as sort of we compare it to GILTI, and then we think about now the income inclusion rule, but how's your just general CFC rules work?
So in general, I think the German CFC rules principally are quite similar than the US rules. We have certain catalog of activities which are actually okay. Active income, we call it. These are the only one which actually are excluded. So in that sense, there's already a little bit different approach you can see, because you need to fall under one of those categories to be okay.
Yeah, it's like subpart F, not like GILTI, right?
Correct. Yeah. So basically, but it really works the opposite. Usually we would say in subpart F, as far as I understand, you have defined passive income, and we do the opposite. Unless you are basically not mentioned in the list, you are basically caught by it. And then basically you have a rate of 15% right now, basically, which have been lowered in the past. And and then basically once you're in it, you have, similar to CC, a deemed kind of income which is taxed basically at the recipient. And of course, the income is determined under German tax law.
Right. And foreign tax credits available to the extent that you've paid some foreign taxes. So it is interesting that you kind of just take the opposite approach. We define the bad income, you define the good income.
Exactly.
But it really kind of
and we
gets you
do
into
it
the
country by
place.
country, also important, because we might touch on Pillar 2 and your GILTI rules, which are a little bit different, so you can basically have cross-country kind of credits. We can't, basically.
Yeah, and the GILTI for those, like, it requires an entire, all income inclusion. It's very similar to the IAR. Yeah. But your CFC rules are not entity by entity, they're country by country.
Yes and no. So basically, they're actually entity by entity in general, just to make it very kind of brief. There is a question also how you have basic group taxation rules to being considered, to what extent this is accepted. That will be a bit of a longer conversation, but in principle, it's an entity by entity.
Yeah, we don't need to go. The U.S. Subpart F has got some similar kind of wrinkles. All right, so I am very interested in hearing about the recent German election. You may have heard, Arne, we had an election and a new president in the U.S.
I heard about that, actually. I don't know. I read it in newspapers, I think. So,
but there's been a lot of news even in the U.S. With respect to Germany, and there's been about a couple of, particularly an American citizen, dual citizen, in fact, who was very involved and vocal, I think, in the German election, which frankly made the German election much bigger news in the U.S. than what we've seen before. So we don't necessarily need to dive into that, but tell me about the German election results, and specifically, what does it mean for corporate tax policy?
Right. So basically, we're now in the process of building a government, basically. So that talks between the two parties. So one is the CDU, which is kind of the conservative, you can say. And then there is a social democratic party, basically, which have been running before the government as well. And now they're trying to build a coalition, and a lot of topics have been agreed. Not necessarily everything in tax law has been agreed so far. We will come to Pillar 2. There seems to be an agreement. You see my cliffhanger, so we'll come to this in a second.
You do this like you host your own podcast.
I think I do, actually.
Yeah.
I think I had you once as a guest.
Yeah, I did.
No, basically, so we have mostly people have not agreed. They are now in the process of ironing it out. In general, I think there is an acknowledgement that the corporate income tax has to be a bit more competitive. But you see that, I think, from the Conservative Party, you see there's a bit more ambition to lower the tax rate. The question is, how do you do it? Do you lower the corporate income tax rate from 15 to 10%, for example, bringing down the whole thing to 25%? I think the Social Democrats so far have the idea of bringing it only down to 29%. So it's a 1% kind of lowering, which, as you can see, there's a bit of a difference in between. So there are, as you can see, different arguments around that. And then obviously on taxes for individuals, there are also, let's say, very different views. The Social Democrats actually want to increase the tax rates for the top earners. There are talks about property taxes as well. Conservatives don't want to do it. So this is still, I think, now the process of being worked out. And then, of course, the big question comes out, do we need simplification of rules? Because right now there is a view that it's a bit too complicated right now. Can you imagine that?
Yeah, I can. It's even hard for us to keep up with, and it's our jobs.
I agree. It's getting a bit too much, I have to say. It's like, I think this is a public perception. So we actually just to, if you don't mind,
please,
I can continue with that for hours. By the way, I thought, how long is this podcast?
We try to keep it at about 30 to 40 minutes.
Yeah, I think maybe this time, the first time we do 1.5 hours.
Okay, I have done a couple with Pat Brown, because we've done that about an hour long.
An hour?
Yeah.
I think we can beat Pat now.
Well, there's no doubt that we could. I'm just not sure how excited our listeners would be for that.
Let's see. Maybe we can cut it into 3 parts. So anyhow, coming back to the topic. So what was the topic? No, we got lost.
The German elections and potential changes.
Right. Yes. So basically, we had last year in the old government, they institutionalized kind of a group of professionals, university professors, but people from business as well, who are coming up with suggestions, basically, without any government involvement, what should be changed.
To simplify.
To simplify, basically, to make it more competitive. 2 big reports about it. I think in general, the practice was very excited about it because it was an independent review by people from practice and people from universities, basically.
Okay.
And I have to say there were a lot of things when you're reading through this and you're like, why haven't we changed that? You're like in Germany, for example, giving you one example, if you want to do a merger or you want to do a spin-off, there is a requirement that you have an independent, separate business unit, basically. And the requirements in Germany, let's say, are very burdensome. A lot of times you just have to document a lot. To what extent is this business really, able to survive by its own? And they basically said, let's just waive it. Why do we need that? We can afterwards have a 3-year period where we basically do some checkups, whether you can sell the shares and just get rid of it to simplify. And it's interesting because when you think about it, and there are certain items you're getting so used to, and just on a daily basis you work with that, and they basically take a view from a little bit higher perspective. And I think there was a lot of excitement around that. I would say there's still hope that certain elements makes it in the current coalition. But also then afterwards, if you go back to daily business, the question comes also what really survives there. And I would say right now there's a little bit of skepticism whether there's really the power to implement this. So really in the end, we will see in the end, this is going to be the responsibility of the new coalition agreement to basically pick this up. Because I think right now there's definitely a need to get a push. And you mentioned also the deficit spending in Germany, which we will see.
Yeah, we're going to come back to that. But let me just ask for a clarification. And, it's always hard for me to kind of wrap my head around the parliamentary system and understand sort of how the coalition works. But correct me where I go wrong here, but the prior, before the prior election, it was more the Social Democrats that were kind of the leaders that had... I don't want to say the majority, but they were kind of leading the coalition.
Yes.
And now is it the Christian Democrats?
Correct, the Christian Democrats.
Who are more conservative, but still relatively, I'd say, center-right as opposed to the far right.
Correct.
And so the Christian Democrats now are going to have a coalition with the Social Democrats. And this is always hard for us Americans to get our heads around.
I understand.
And then they are, so there's, obviously different philosophies that those two parties have, and then they are going to have to work together to figure out how to make whatever corporate tax law changes.
This is how it is, because in the end you need the majority of vote, so that's a little bit of the difference, and normally a party doesn't have the majority of the votes, so that's why 2 or 3 parties have to basically agree. So the coalition really sets the tone and basically the topics for the next 4 years, so therefore this is a very important process, because people really hold on to that. Also when it comes to the end of the term, people are checking, have we actually done everything which we thought we want to do? And as you said, if you win the election, which the CDU had, the Conservative Party, you would expect to set the tone. And I think right now there's a bit of surprise also that the Social Democrats, which are a little bit more left from the center, as you said, they're still setting a lot of tones. And I think there's a little bit question marks by people like who actually won the election,
I see.
So that's a little bit the current status. But I mean, in the end, it's also negotiations. You will see what the outcome will be.
So maybe, because I do obviously want to get to Pillar 2, but I want to get your thoughts on a term that now is kind of it's now ubiquitous across the globe, is the German debt break. Right. And I mean, this has been reported and been in a U.S. publication, of course, The Economist and other publications. And so maybe just tell us a little bit about the German debt break. I mean, we could spend a whole podcast on this, but just sort of how it operates. And then I'm also interested in your potential thoughts, or what does that mean for potentially for business, particularly in Germany and the economy as a whole?
So basically, by our constitution, we have certain limits what can be spent. And this is something which has been put in our constitution for quite some time. And therefore, this is really, let's say, I would say a foundation of German fiscal policy. So our GDP is relatively moderate, I would say, so far. So you could also say a bit really a sign of austerity, so to speak. And now, as we all know, there is now the big question to what extent, you need to step up, investments in infrastructure, which is required, but also in military.
Yeah, and defense.
Defense. We all know, of course, there's a discussion to what extent also European countries, Germany being the first one, need to invest more into military. I don't think we want to go too much into politics here, but I think now the overall objection is also by Germans, we need to basically, be prepared to be able to self-defend ourselves, basically. So therefore, this is something which led to the conclusion really short after the election to basically change those rules. And now I think you can say, without being too technical, it have been cleared out that basically it's a possibility to basically have a spending over this normal kind of limitations. And we will probably see an increase in debt in the future. You see it already in the bond market. Interesting, they have already reflected that. Usually, Germany had a very low interest financing that was already increased by I think 0.5%. Very markets always are very fast on behind that. Yeah, and now the question comes up to what extent how this will be spent. And you would say, of course, that will be an increase in economic activity because these investments will basically jazz it up. I think in Germany, people are a little bit kind of skeptical to what extent also how fast the money goes, to the ground, because as always, bureaucracy is something people are afraid of. So that's one thing people are basically still trying to see how Germany will figure it out. But yeah, you can certainly say this is a change in policy for sure. And but I think the overall observation is, even though Germans are in general more conservative from a fiscal perspective, what I'm hearing from people, the majority, I feel like maybe that's the time to do it as well, with all the uncertainties in this world. So.
And do you think it could impact or will impact like the potential rate reduction or simplification? In other words, are they tying like, hey, we're going to need if we have increased debt, we're going to need additional sources of revenue? Is that directly related to tax policy, or are they starting to directly relate those?
Yeah, well, in the end, yes and no, because now, as I said, basically these limits have been basically unveiled. So in that sense, there is the possibility to some extra funding. Okay. But of course, also when you lower the rates, these are extra ones which are basically then have to be funded from the normal kind of budget. So therefore, there's a certain correlation. Also interesting, just as a side note, you might have seen it, we have a surcharge tax as well. I should have said that as well. I said corporate income tax rate, trade tax, and then there's a surcharge tax, which we had from the unification. And just last year, there was a long-awaited judgment from the Constitutional Court. It's a 5.5% tax on top of the 30% or 50%.
For corporations.
Corporations, yeah, and for individuals as well. Okay. And the question was to what extent it's not constitutional. And there was already the fear that if a court decides it is unconstitutional, there's no room for any kind of, change to the tax law. Court decided it's constitutional. That's why no one talks about it.
Okay.
So basically,
it is what it is.
It is what it is, basically. So maybe I just want to put this in because it's very recent from last year. I don't think it made it really into the news. No one in Germany talks about it.
Is that a covered tax for Pillar 2 purposes?
It is. It is. Okay. That's for sure. Right.
Not that there's going to be any German constituent entities that don't meet the transitional safe harbor.
So, Doug, I just want to ask you. That's probably the only thing you think about Pillar 2. I was when you're going to bed, I think on your cushion, I think there must be a Pillar 2, a little sticker on it or something.
You're not the only one that has accused me of that. But I do try to diversify on some other topics here in the cross-border tax talks. But it certainly is taking a lot of my oxygen. So let's move there, shall we? Let's head to Pillar 2.
Please.
All right.
Yeah.
So there's been, Germany has been in the news also with respect to Pillar 2. There were some officials in Germany that made some public statements about pausing Pillar 2, including a very thoughtful piece by your co-host from your podcast that I read in the tax press, Christian Kaiser. Yeah. And then there was also been some recent statements from new leadership about everybody calm down. And I can't remember the direct quote, but can you maybe summarize and where are we in Germany and Germans' views and sort of German policymakers' views on Pillar 2?
So that's a complicated topic, I can tell you. So basically, you might have heard that there were certain individuals who are actually from the CDU, from the Christian Democratic Union Party, from the states who decided we need to have a pause on that, basically. And this was made public just very recently, basically, before the coalition actually negotiations started. And some people thought already, well, that might be a first sign, basically, that maybe Germany takes now a different view towards it. Having said that, that's the one part where the current coalition is in agreement, stating, because in this preliminary kind of results, there is basically the statement that both parties agree in general these principles should be upheld to have a level playing field, that Germany still stands behind it, basically. Having said that, now it's going to be an interesting discussion what comes up with the U.S. proposal for, the Section 891 and 899, if I'm not mistaken.
Executive order. I love that now you're throwing out U.S. code sections. There's a problem like when you guys are throwing out code sections.
Yes,
and we recorded a podcast before this one. Would encourage listeners, and we're going to come back to 891. But,
that's also something which we now to see. What is the outcome of that? Because obviously the idea was originally we will have a level playing field. Also, I think there was an agreement before, as been seen, that was agreed. That's what was introduced, and now we see there's a different viewpoint from the US, of course. And now the question is, how do we deal with this? So I think this is not only a German topic. So we will basically say it's a question about Europe and OECD. What is the current kind of status? How can this be also negotiated currently? So, I mean, honestly, it's something which I don't think we will decide by ourselves. There is your hope that there will be some reconciliation, of course, but I think we will probably have to look more to Paris and to the OECD. What is the current proposal? How this can be worked out? I don't know whether you have a viewpoint. What's the outcome? I would be very excited to hear anything.
Listen, I have no idea what the outcome is going to be, but I will tell you obviously that the U.S. and the President Trump certainly has tried to create some leverage for the OECD with the executive order that came out the day after he was inaugurated. And we spent a lot of time on the prior podcast, so I won't review those again. But obviously the threat to potentially increase withholding taxes and taxes on residents of jurisdictions that have implemented discriminatory or extraterritorial taxes, both that exist currently in the code, so Section 891, and then there's also that proposal, Section 899, certainly gives the U.S. some leverage. I think, Arne, that one of the important things for the OECD and for Pillar Two is we still need to get more administrative guidance come out. Obviously, this UTPR issue is important, and I want to come back to this UTPR issue, but there's still a lot of guidance that taxpayers and practitioners need to just how we apply. And in order for you to get and obviously the U.S. is an inclusive framework member, to be able to get administrative guidance out, they need all the inclusive framework members. And so
how is this going to work?
There is one so that's also a point of leverage for the U.S. As we think about compliance, that's why they got out that Globe information return. It was 2 or 3 days before inauguration. They realized and fortunately, I think for taxpayers, and for practitioners, we're actually thinking about what does that Globe information return look like? We needed to have that and the XML file, et cetera. So I think, that's going to be very interesting. With respect to the UTPR specifically, just to remind listeners, President Trump said that he doesn't want the UTPR to apply to the U.S. parented groups, but then he also added foreign subsidiaries of U.S. groups.
Oh, did he? Okay, is it included? I wasn't sure.
Yeah.
That.
So he specifically said in the executive order, which I think sort of took that negotiation up a notch, right? Because the UTPR safe harbor applies to the end of 2025.
Exactly.
The question was, is he going to try to make that permanent? Maybe the OECD said, we'll extend it for 3 years.
It's not enough.
Hoping that there may be a new administration, that it would change. I have no idea where all this is going to play out, but I do think it's very interesting that in an executive order that he also said he doesn't want the UTPR to apply to subsidiaries. And frankly, one easy way for the OECD to do that would be to say that GILTI is a qualifying country by country. As a qualifying income inclusion rule, an income inclusion regime. But I really have no idea how this will play out. How much does that obviously undermine then the UTPR? What does it mean for the future of the UTPR?
And absolutely. And what does it mean for the overall kind of system? Because originally it was built, let's say, on an agreement. This is a level playing field. Now the question comes up, does it make sense to have this still in place? Of course, it's going to be a question which will have to be answered at some point in time. It's more broadly speaking. I think this week we had a seminar for a practitioner who was retiring, and we had a lot of well-known, let's say, representative from the German tax community there. Wolfgang Schön was there as well, who was actually a very well-known university professor from Munich. And we had the question also, to what extent is this the end of multilateralism, basically, which we've seen the last years, And it's interesting that the last years, if you think about it, that on the OECD level, I think we never had so many international agreements, and that's something for years. We always said we can't have unilateral rules. We need to agree on something. I remember that I was basically all the time arguing in favor of that. Now we have those rules, of course, and now you see all the problems in terms of the complexity, of course. And then also what happens if suddenly someone deviates, how do you work this through? And it's going to be interesting to what extent this will be maybe the end of this development, or maybe there will be a restart. I really don't know. But it's truly fascinating what's happening right now.
Yeah, and we've talked about this, or I've talked about this on the podcast. There were some sort of fundamental technical issues with the UTPR, specifically with respect to treaties, right? And I asked that question of Pascal when I had him on the podcast, and we know what his answer was. He was but there were some real thorny technical questions on the fact that this is really extraterritorial and potentially discriminatory under the treaties. we'll see how that plays out. I mean, as we're talking about this, there are 31 countries that have enacted the UTPR, and it is 2025, so it is in effect.
It is.
I think what I've been cautioning taxpayers as well as practitioners that. Like with all this noise that we're hearing from the U.S., that we're hearing from Germany, like, oh, Pillar 2's dead. This thing's not happening. And I have to keep reminding, like, it's not whether it's happening. It has happened, right? We had 34 countries where Pillar 2 in some form was implemented in 2024.
Right.
I mean, it's here. Companies are going to need to think about compliance. It's fun for us to kind of debate and talk about what's the future of this whole thing. I think it's going to take years to shake out. And my view is that a QDMTT is just an corporate alternative minimum tax, and an income inclusion rule is a CFC tax. I think those are probably here to stay. We'll see what happens with the UTPR, but it'll take some time to shake out.
It will take some time. And also, it's actually crazy to think about how many questions are there unanswered. I'm just pulling the one out, which is now heavily debated in Germany, M&A transactions. Let's assume you buy a target company and suddenly you get taxes back in 2000, let's say 28 for the year 2024. Are those taxes reduction for another entity now something which reduces your tax rate? Do you have to go back to the seller to recalculate your tax? We talked about this in our expert group. I don't think there's an agreement on the OECD level on this one. And it's actually crazy if you think about it. We have to work with this. Clients have to basically work around it and trying to get their heads around that. So I think it's interesting because I feel on the one hand the guidance, it's almost too much. Like every time you have a new guidance, you're like, how can I read this again? I mean, I probably need an AI tool for that.
But this is like, Arne, like this, as U.S. practitioners, we're so used to this, right?
Yeah.
Like you introduce these types of concepts and then taxpayers need guidance on how to bring these in. And this is why we have like tens of thousands of pages of U.S. regulations. And I knew when those model rules came out and the commentary, it was like, we're going to need hundreds, if not thousands of pages of administrative guidance to interpret.
It's a brand new. We're getting there.
Well, until like now it's paused, right? With the U.S., like we can't get administrative guidance.
Would you agree it's an easy tax? Would you think it's straightforward?
No.
Okay.
I
we agree.
So, yeah. All right. Yeah. I never believe that, and I mean, and I'm just so many questions. There are just, I mean, even practical, and I mean, some of the practical questions. We don't like. There's no guidance that the OECD gave out on QDMTT forms, for example, and so we have 34 countries that implemented QDMTTs in 2024, and we're sitting here in April of 2025. And at this point, we've got two countries that have kind of published forms or at least a process. And like Belgium, for example, their return is due in November of 2025. There are five other countries that have QDMTTs due in 2020 at the end of 2025, and then most of them are just following in 2026. But I mean, the technology that we're building, like we need to know, what does this form look like? What is the technology format? Like how do we build this in? And I mean, there's just so many like practical and then to your point, technical questions.
Sure. Yeah.
Let me ask you more of a theoretical question that if Germany would decide that we're no longer supporting Pillar 2, and you obviously didn't suggest that, but what is the process? Let me ask this more broadly. What is the process that the Germany and the EU would need to go through if they wanted to either pause, repeal, or make substantive changes to the directive, right? Because all 27 members signed up.
So the first thing is, in theory, I'm saying in theory, we could repeal the law. We would just not be in line with European law. And I'm stressing out it's in theory because no one would actually ever consider this to happen. We would have then an infringement procedure basically being introduced by the Commission. So obviously,
does that have financial penalties? What is that?
Financial penalties, basically. Yeah.
For the country.
For the country, correct. So that is a theoretical possibility. As you can imagine, we consider ourselves an important part of Europe, so that's not going to happen. I mean, never say never, but it's very, very unlikely, I would think. So in that case, if you want to change it, we have, as you rightfully said, we have right now European regulations around that. We have a directive, basically. If you want to change that, you need a unanimous consent towards it. And that's also the tricky part because it's a long process. I mean, a lot of people said already we'll never get easily there to get a directive even. Also, there is a debate, all the changes to OECD, to what extent are they sufficiently reflected in the directive?
Yeah, all the administrative guidance, you mean, that comes out.
Correct, yeah. Especially on this one because the directive is more concrete than a lot of other directives as well. So in general, Some people say it's like a little bit kind of, in Germany we have a term, it's versteinert. It's like, how do you say it? It's like stone, it's stoned, it's engraved in stone.
Oh,
so
yeah.
you cannot take it out easily.
Right.
And there are a lot of people who are also saying that was maybe a mistake, because then you bind yourself for the next years, basically.
Yeah, less flexibility
less
to be able to
flexibility,
try to
correct.
change and adapt. And
So-
there's been a lot of questions, but some of this administrative guidance have really been substantive changes. Right?
Absolutely, absolutely. So, I mean, in the end, there's, I think, going to be an interesting outcome. So, for me, the big question comes around, how is it going to be resolved with the US? That's the first big question,
Yeah.
basically. And if basically there is a considerable kind of exemption, basically, how long? And then, of course, the question will come up from the industry. How does it make sense, basically, if European countries have to basically follow those rules? You hear this already now. You mentioned already Christian Kaiser on that as well. Those voices will probably get louder. And I told you already, I don't know what the outcome is. I think there is still the hope and wish that people will stick to this idea. But there's certainly right now also some cracks, I would say. But it's going to be, my projection is, it's going to be a longer process, basically. It's not going to be a quick decision. And as you rightfully say, right now, taxpayers have the problem that they're in the middle of it. The law is applicable. They will have to file tax returns. Whatever they do right now is subject to those rules. And on the other hand, you see basically how these rules on some other important partners, people saying like, we don't want to have those rules. They should go away, and put even pressure to repeal those rules.
Right.
So
I joke, Arne, that as a tax advisor, I sometimes feel more like a grief counselor when we're talking about Pillar Two and the stages of grief. The first one is denial, then anger, and then acceptance, and I don't really know what's after that. I want to get taxpayers and practitioners to acceptance. And I feel like we had, with the way Pillar Two had progressed, before the Trump inauguration and then some of the comments from Germany, that a lot of practitioners had gotten over the denial and still maybe a little angry, but like, hey, we need to start to comply. My concern is that they move back into the denial phase, and I just want to continue to remind folks that they got to start getting ready, prepared for compliance. I mean, there could be changes, but it's going to take some time.
It's going to take some time. Yeah, I mean, I think also that was my first reaction. Okay, people would say, finally, But I think in Germany, I can tell you, people still take it serious enough. The projects are still, for the companies, still ongoing, obviously, because they know they need to file. But you're a little bit in the interim situation. People, of course, really closely follow it. I think the majority would be very happy if this would be repealed.
Of course, yeah.
I think not from a policy perspective. I think people agree towards it. But it's just people consider it to be very hard to comply. So I think I would definitely expect, if the rules, I would consider them to survive, that there will be attempts to soften it, to basically maybe safe harbors, extend them, make them easier as well. So I think this will be a theme which you will see. But in the end, it's a political process, and you don't know what the outcome is.
Right. So maybe if I could ask you to just sort of double click on sort of how are German multinational enterprises, so German parented groups, generally preparing for Pillar Two, and obviously data is a huge challenge. Sort of getting those what I refer to as the Pillar Two books set up, but of course it's impossible to generalize the entire German market of multinationals.
Right.
But what are some trends or some things that you're seeing as they get ready for Pillar Two?
Well, I'm sure this is something you don't hear the first time. I mean, you actually gave the answer already, I mean, the first question is, how do you get all the data, basically, to get them together, That's a big challenge, What is your ERP system, basically, which you're working on? There are, let's say, different trends, and I don't want to go through any of the specific kind of tools or whatever. Yeah. I think there's a variety of different tools which are used for different reasons by taxpayers.
For sure.
Safe harbor rules are an important one. I can certainly say that's something which we see in a lot of places.
And getting the country by country report process correct to be able to have a qualifying country by country report.
Yes. So these are the big topics which you obviously see, and and then people. I mean, in the end, it's a long process just to get there. Basically, it just takes time. Now we see also interesting the first time people look into technical questions when it comes to current reorganizations. What does it mean in a Pillar Tool? So this is still very early. Interestingly, you still actually I find relatively seldom, I wouldn't say, but I would expect more questions than that behind.
Yeah, the reason I asked, and I appreciate it was a bit of a loaded question, Arne, but as I travel around the globe and talk to taxpayers and practitioners everywhere, it's really the same everywhere. I mean, whether it's a German multinational or a U.S. multinational or a Japanese multinational, I mean, it's like I hear the same things. People are approaching this very similar.
Right.
But then I also hear sometimes, well, oh, some other country is doing this better. Clients are in a different situation or whatever. And it really is a common challenge for all of us. Frankly, both practitioners, it's very challenging trying to get ready for this, and as well as taxpayers. And so that's really, I just wanted to confirm that.
Yep.
So maybe the last topic that I wanted to talk about, and
so we don't do the 3-hour podcast.
No,
last topic?
I mean, I'd love to, but
really,
I would. I don't know if our listeners would, but I could talk to you. We might need to grab a beer as part of that process.
Yeah.
But sort of maybe shifting gears from Pillar 2, but it's certainly related, is, and we've been at this conference here, the EMEA Tax Academy here in Prague, and there's been some discussions, as we've had with our policy team, regarding simplification in the EU.
Right.
And, I just think about, all of the changes that have occurred, and I particularly am focused on ATAD 2. We spent a lot of time, as we think about the mandatory implementation of CFC regimes, anti-hybrid rules, some of the interest limitations.
Yeah.
It does really beg the question that, well, if we're going to even forget about the UTPR, even just if the income inclusion rules and the QDMTTs are here to stay, are all those rules still necessary? And at what point is the EU going to start to really sort of reconcile and decide what's important and what's not? And what are your thoughts on that?
So, I mean, it's, as you correctly alluded to, it's certainly from a European level, and this is also more broadly, the aim to declutter. I guess that's now the term which is being appropriate to be used.
Okay.
And I think also people feel more and more tax law are part of that. So there are evaluations basically on the effectiveness of certain measures. Starting from DAX 6, we haven't talked about those rules, the mandatory disclosure rules, which are also considered to be quite burdensome. The question is, are they effective? It's a process which is ongoing. You rightfully also talked about the CFC rules. I can certainly tell you from a German perspective, there are a lot of voices who are questioning, do we need those set of rules, especially option A? I mean, option A, just to remind ourselves, means also you have the passive income mentioned. And remember what I said in the beginning, we take even the opposite view. We only have the active one, and then you're okay. So it's even a broader approach. So I can certainly say in Germany, it's a big topic around that. And the expert committee I just basically mentioned, who had the assembly of university professors and practitioners, they also, especially on this one, had a lot of questions whether it should not be simplified. So those questions are out there. I think it's a little bit too early to basically see to what extent that will change. I would be surprised if certain elements like the anti-hybrid rules will fundamentally change because I feel somehow they have been more accepted, so to speak.
Interesting.
I think also in the general practice, somehow you don't hear too much noise about it. We also have now regulations also in Germany, which actually interpret them as well in certain areas also, let's say in a way which could be seen as helping to make it more administratable, if that word exists. Can you say that?
Administrable.
Okay. Administrable, okay. All right, so I'm working on my English here as well.
Yeah, no. Your English is a lot better than my German, as we proved at the beginning of this podcast.
Well, thanks, but your English is also an easier language. So. All right.
Touche.
So to answer your question, I think we will see, I would expect some simplifications. The question is how material, and is it basically meeting what everyone would hope for? We will just see. So.
Well, as those simplifications and changes occur, we'll talk about it on the Cross-Border Tax Talks podcast, and on your podcast, which you're going to pronounce is
freshly served, Frisch Serviert.
Yeah,
basically.
Freshly served is the English pronunciation,
Yes.
and some of those you do in English, most of those are in German, but I would encourage our German listeners to certainly check that out, and then keep an eye. One of our colleagues, Pat Brown, I know, did an excellent podcast with you and Christian. And the thing I will say, Arne, I do really enjoy your podcast. well, the ones that I can understand in English, but that you do have a taxpayer, right, with Christian, and that so you get both the advisor side as well as the taxpayer side.
Yeah, exactly. And you know what? Maybe what we should do now with the AI, we should try and have a simultaneously kind of translated. Maybe we should look into that.
That is a great idea. And, Will Morris, as part of his policy on demand, is using an AI translator to do his weekly updates. So that is technology that I think the listeners of the Cross-Border Tax Talks podcast would love to be able to listen to English translated versions of yours.
You know what the only problem is? That our jokes, which are not funny, will be even less funny in English. That's the only problem.
Well, and our stuff doesn't necessarily land very well either. But we're going to keep trying. All right. Well, Arne, always a pleasure having you on. Thank you very much for coming on.
Thanks for having me.
So thanks for tuning in to this week's episode of Cross-Border Tax Talks. Thank you to Arne Schnitger, PwC International Tax Partner based in Berlin. I'm Doug McHoney, PwC's International Tax Services Global Leader. Stay tuned for another exciting edition of the Cross-Border Tax Talks podcast.
This podcast is brought to you by PwC, all rights reserved. PwC refers to the U.S. member firm or one of its subsidiaries or affiliates and may sometimes refer to the PwC network. Each member firm is a separate legal entity. Please see www.pwc.com/structure for further details. This podcast is for general information purposes only and should not be used as a substitute for consultation with professional advisors.